Alex, do you want to take over the screen and just show us a few things, some of the more recent trades, and just give us a little bit of a breakdown on what you're seeing and stuff like that?
Definitely. Can you see my screen right now?
Yep.
Okay, what I did actually before I do that, I had some things that I wanted to share with people because it's not what you know, it's what you can actually execute. Because even though we all might know about all of these great trading strategies and be able to do it, it's how well we execute that actually determines how much profit that we're going to make. So if you look here, this is back in like 2018, there was five capitulation events and it lasted 365 days until we started making higher highs and higher lows, right? Same thing here. There's five capitulation events, one, two, three, four, five, and it lasted about 365 days before it started making higher highs and higher lows. Now, if you look forward to where we're at today, we had October 10th, we had in November, like late November, we had in February, and I'm, expecting two more until we actually hit the moment where the bull market is going to begin, right? And that's the moment here for most people. And the reason I bring up what you can execute is because everybody knows that you should buy your bags at the bottom and sell them at the top, but so few people actually sell at the top. And I just wanted to say the purpose of blockchain that was taught to me by my mentor is to take digital assets and create price appreciation and then pull that out into your bank account and make that into real world assets. And so
100%.
many people are putting more money into the blockchain, into the blockchain, into the blockchain, and they're learning or it's there forever. The purpose of it is to have that money multiply and then use it to buy a house, pay for your college education, go on a cruise for a year, whatever it might be for you, right? That you want to do. And the moment to do that is at the top. Now, if you've missed that, which most people have missed that, you get another chance every single cycle to be able to do the same thing. And the moment to do that is in this range here, which is from, let's say, August all the way to January to be able to get your spot bags. And if I were to get a spot bag, by the way, it's not financial advice, but this is how I would do it. I would go heavily into Bitcoin and, be able to do that. And the reason, if I can really quickly, is my fiance, all she did was buy $100 a week of Bitcoin. And she'd been doing that since like 2018. And she's got enough money to be able to, buy her own house, do her own thing, be able to make it work. And she's beat me at trading for the first 3 years and would give me shit about it because I was, trading staking pools or, investing in some new project that was happening or using leverage or whatever. And I'd always get myself back to zero where she was steadily building, just buying Bitcoin. And she's done an amazing job, just from being able to do that. Now, so this is why I would say buy 50% Bitcoin, ETH, BNB, XRP, and Solana. And nobody talks about BNB, but BNB was the quiet winner of all the majors this last cycle. It
Yeah.
went up to $950, right? And so it's not something to sleep on. And then maybe it's the one that you like, whether that's Hype or whether that's Monero or whether that's Fartcoin if you're a degen, right? Whatever that you want to be able to invest in to be able to make that work. But then in your exit plan, you want to look at like, okay, how am I going to exit? Well, you have to have two exits. One is the target, and then one is the hard exit date. And so the time to buy again is this year between August and January. And then the time to sell is either you hit your target of Bitcoin at $200,000 or you sell by November 30th, 2029. Now, everything follows Bitcoin, but the peak doesn't happen at the same time. For example, Solana peaked when Donald Trump launched his meme coin and everybody was rushing onto Solana to be able to make that work. And that was well before October, right? So they could peak with the price before the date. And XRP peaked even before that. So they don't all peak at the end of a cycle when Bitcoin, is peaking. So you have to have two targets. One target is the price, and the price for Bitcoin would be 200,000, 6,500, BNB 1,400 or even 2,000, XRP 450, Solana 325, or whatever your token is at 3.5x. But if that number doesn't hit, then you just need to get out by November 30th, 2029. And then just make sure that you sell, you exit, you let the market, fall apart, you celebrate your win, and then you go in and you get back in when it's time to get back in, which would be 365 days after some major crash
So do you think
event.
that the 4-year cycle just forever plays out?
I do. I do think so. I think that Satoshi created it in a way that it's always going to be that way. And I think the major bag holders live by it. And they all exited in October together. And I think that's going to continue to happen. Not that there can never be a super cycle. Of course, it's possible, but it did not happen this year, and everybody was talking about it. So
Last
yeah.
two
So
cycles, actually.
yeah. So yeah, I definitely am still a believer in the calendar, and I think that it's easy to be able to trade it if you work off of it. Now, if we look at like how the algorithms did, right? How they did this last March. So Praxis actually was able to close two trades. So for the month in March, it did 11.5%. Arrow on Monero, it actually had 20 trades, 12 wins, 8 losses, and it had 9.7% that month at a 60% win rate, which is slightly below what an Arrow should perform at. But half of that month was bullish, right? We had a
Mm.
bullish candle on that month. So, an Arrow still was able to be profitable. And then Satoshi had one close for about 6%, and it had one trade that it was in. And then Bitcoin, Arrow on Bitcoin was slightly under in March at a 1.8% loss. Right. So that's the stats on the algorithms. Now, I think there's three ways that you can trade. Algorithmic trading, you can discretionary trade and be able to make that work. And then there's crypto investing, where you have a long-term plan where you plan your trade and trade your plan, which would be having your spot bag and then exiting it. And I think if you're going to make money in the space, that you should do all three. One that's working for you passively, one you're manually involved in the market, you're in tune with it, you're enjoying it. Maybe you take a little bit more risk there, right? If you can manually do that. And then the other one is long term. But even better than the algorithms is spot buying. I mean, everybody that I know that have gotten wealthy through crypto, they've done it by incredible investing, buying the bottom, and then being able to sell the top like a boss, right? And being able to make that happen. So, I just encourage everybody to look at those windows and get it right this cycle,
Yeah,
right? Just
100%.
tell yourself, I'm going to get it. I'm going to sell. I don't care. I'm going to plan it out and I'm going to follow it no matter what, and not sit there and enjoy and send screenshots to everybody in your family about how up you are in your bags and then get surprised when the market tanks, right? I mean,
Love it. I think
it
it's
happens
actually
all the time.
also I think it's also a little bit easier to sell as well when you do have something like the algorithms working for you passively, because that's sort of like an income stream. I feel like people get super greedy at the top because they're like, oh, it's the only way I can make this kind of money. But if you're even taking something out and putting it into algorithms or something like that and building it, slowly building, your passive income through the algorithm setup, that's like an income product that you can have there. And then you can, build a bag up from the income that's coming out of the algorithms, that's your passive income stream, and then you can use that to build a bigger bag for the next cycle. And it just helps, I think, to put you in a bit of a better space psychologically as well. So yeah, but give us a bit of a run through on some of the recent trades and stuff like that. What do you got up here now? Is this
This is
Praxis?
Praxis. This is
Yeah.
Praxis. And so it works in a ranging environment. And here we have, since, February, for 2 months, we've been moving between 65,000 and 72,000.
So it
Right?
didn't take a trade for a long time there, did it?
It did not. No, it didn't take a trade until back when we were in a range at the previous range at about 91,000. And then it closed here. But then while it's trending, that's the moment that Satoshi's going to be able to be successful. But then as it started ranging and really working itself sideways and having volatility in this range, Praxis has taken 3 trades in that moment. It's doing exactly what it's designed to do. So what happens is, there's a huge pump. Everything's extremely stretched or overbought, and then it goes a little bit higher, and then it immediately snaps back, right? So you have a 6% move here, you have a 6% move here, and here it started to do that, and then they announced the ceasefire, and we got a little bit of a push. So right now it's at like a 3% drawdown. But as you know, it got up to this range high, like up in the zone, and it started rejecting off of it. And like you said, if it does push past this 76,000 and makes it past 78, we're looking at a bullish setup. But if it gets rejected off of this, then we're looking at another 6% win for Praxis coming up here soon.
Very nice.
So we can take a quick look at Satoshi. Oh, it's not set at the right price. Let me fix it. 1 second. Oh, I know. Okay, hold on. All right, so Satoshi is a trend following algorithm. And when the market is trending, right, and it's trending, not US, yeah, when it's trending south, what you're going to have is it's going to take a trade at the buying climax and close it, take a trade at the buying climax and close it. Now, this one, it took a trade a little bit early. Is that Coinbase? No, it needs to be on Coinbase. Hold on. There we go. So again, close it, and then it took a trade here, closed it, and then this is when Satoshi closed for everybody in the group. Now, I want to let everybody know that's been listening. If your trade did not close at that moment, it's because we had 50 plus individual signals happening on TradingView, and TradingView actually rejected everybody's signal in order to be able to close. So what we've done to be able to fix that is we're actually consolidating everybody's signals into one signal. So it's going to go from TradingView to the tower as one signal. And then after it leaves the tower and has already left TradingView, it's going to spread out to 50 different signals in Signum and then 50 different signals in the exchange. That way, TradingView is not going to block any of those signals. So everybody should have closed right there. If you are still, some people, we talked to and they closed it, they were still in profit. But if you're still in it, just hang on because Satoshi took another trade and it's going to be able to close again as the market rolls over. If we were 3 or 4 months down the road from where we're at right now, I would be worried about it. But right now, I'm not worried about it at all. We still have 2 more legs down. We're going to go, and test the 60s, get into the 50s, maybe even lower than that. So there's still plenty of time to be able to make the trade and be able to make that happen. But Satoshi is working its magic in the trending environment. And if you look back a little bit, same thing here. When it's in a range, it's going to be quiet. But when it's trending, as you can see, what we had from November to December, Satoshi was absolutely on fire, right? Took a trade, close it, took a trade, close it, took a trade, close it, took a trade, close it. It had like 4 in a row as we were making that trend. And then during a range, it's going to be quiet. And this is the moment when Praxis would be firing. So the other thing I want to mention to everybody on the webinar is that if you're only using one algorithm, you're doing it wrong. You want to be able to have the entire system. You want to be able to have, Sebastian's ETH hedge. You want to be able to have Praxis working for you in a ranging environment. You want to have Satoshi working for you in a trending environment. And if you want to be able to, have an active algorithm, then, use Arrow, but put less capital on it because ETH hedge, Praxis, and Satoshi, they're printing. They just work slower and you have to have patience for them to be able to happen. But if you're only relying on one, like if you're just sitting on Satoshi or you're just sitting on Praxis, you're doing it wrong. And I highly recommend that you get, all 3 or 4 running for you at the same time.
Yeah, 100%. Well said. Anything else you want to share, Alex?
No, that's it. I'll pass it back over to Sebastian or you.
Awesome. Yeah, I might just pull up the results that we've got, Seb, since we started running ETH, or in my own personal account, we started running ETH Edge. It's been running now for 60 days. We've had 96%, that's pretty much 97% win to loss ratio. I seeded this account with 20 grand. It's up, just under $500 or $450, I should say. He's won 30 out of 31 trades. The one loss that we actually had was actually a misfire in position sizing. So Sebastian, saw that and he closed it pretty much instantly. So otherwise, it would be running at a 100% win rate. Sometimes people freak out when they say 100% win rate, so it's probably good to see one loss in there in the books anyway.
It's not perfect, but you're not wrong. Like, it should not have lost a trade as of yet, right? So, yeah, no doubt.
Exactly. And the really nice thing here is this is like a beautiful, nice equity curve just curling up and to the right here. And that will continue to compound over time. But, I did share in the group I think last 2 days, we obviously we wanted to get this set up and make sure it was running smoothly and everything like that. We've been testing it now. Obviously the execution is working really well. So I chatted to Sebastian over the last few days, and we have decided to just increase the amount of risk that it's taking, because as you can see, the max drawdown was less than 0.5% over this 31 trade period. Only 0.38% drawdown. So it's fine to increase that. We're not having any issues with risk at all, obviously, with 0.38 max drawdown. So we're increasing the risk. We're going to increase the position sizes by double. That's correct, right, Sebastian? Because we were running it on pretty ultra conservative mode, right?
Yeah, I mean, and I think I'll wear a bit of the blame for this, because this really is an institutional algo, guys. It's run, it's built to run at, tens, if not hundreds of millions of dollars. So I think I'm also someone who, I've spent the last probably 6 or 7 years at the institutional level, and I think I'm very much used to running things in an extremely, almost too safe way sometimes. So as we can see, very clearly, even if we were running triple the risk, the maximum drawdown this account would have been in since we started would have been 1.2%. So, I mean, that says a lot, right? So we can definitely up it, and the cool thing is you can kind of quantify the numbers, right, guys? So if we were taking 3 times the risk, we would have made about 6% in 60 days with a 1.2% drawdown. So, I mean, that's 3% a month. You compound that, you're getting pretty close to 50% a year, right? It doesn't actually take much to hit that kind of magic number of what we're going for. And, if you can do 3.5 a month compounding, you'll hit that, right? So I think definitely, it was good to make sure it was executing right, but we've really won 30 trades in a row. We're not seeing any drawdown. The account's growing steadily. The equity curve's beautiful. So that tells us, okay, it's time to scale up the size. And even then, we've only doubled the risk. So, I think that might sound like a lot when you say, oh, I'm doubling the risk. But if you think about how safe it's been running already, the reality is no, we're not really. We're just increasing the position sizes. So nothing to fear. And definitely everyone will start to see a little bit more performance now. And thank you guys for being patient, because I know, ideally 2.2% in 60 days. Some people would like to see more than that, but at a minimum, you've been able to see how the strategy works, how it trades, how it handles risk, and more importantly, how efficient it is. Because really, that's what it's meant to be. It's an efficiency machine. That's why the win rate's so high.